Sean Terry, Flip to Freedom is in the house. Let's go. Let's go.
How you doing?
Sean,
you guys look great.
We're going to wait a couple of minutes before people pile on, but we are super, super excited. You have a ton of fans in our group, Virtual Wholesaling Israel. People have been asking to have you for over a year and a half. And we finally got you here. So we are super, super excited to have you, Sean.
And shout out to Shirley Luz, one of your students, Sean, who made the connection and helped it happen. So Shirley, if you're over here.
Yeah, we love Shirley. Shirley's amazing. She's a hustler out there too, which is awesome, which is great. I'm gonna plug in over here.
So before we start, just gonna keep a quick intro how I got to know Sean. Sean, I don't know if I told you, but you changed my life. I was buying rentals in Memphis, Tennessee, trying to do remote flipping, and only after I saw one of your podcasts, Flip to Freedom, and I saw, who is this guy talking about, with all of this energy, and started listening to every podcast you had, and decided to come down to Extreme Freedom in Phoenix in 2016, and then I joined the Boardroom Elite to spend more time with you and build my business. Was able to quit my 9-to-5 job and just go full-time wholesaling, and it was a blast. And I'm so excited that I had the chance to meet you. And now I feel that we're almost closing a circle by having you here in the group. So I'm excited to have you, man.
Well, Chaim, I can tell you it was amazing because we met. And you actually, you virtual wholesaled long before I did, right? And because you would travel back and forth, you're up in Northern California. So it's like you almost pioneered the virtual wholesaling space. And I remember thinking at the time, and I was like, how does he do this over the phone? How does he, close and do this and stuff like that? So I think you were ahead of the time, back then. So yeah, I always remember thinking like that. Man, this guy's good to be able to do this over the phone. That's awesome. So yeah, congratulations on that.
Yeah. So Sean, we have almost over 50 people and still people piling on and joining. So we're gonna open it up to questions as well. If people want to ask questions, please. Ask Sean. We have the opportunity to have the master here with us. So I think probably we'll start with tell us how did you start it before we start to dig in, for people who don't know you, like a quick intro, so they get an idea who is Sean Terry.
Actually, I'll give you something even better, because we can look at the market and tell my story through the market as well and what happens with that market. So first off, I just for everybody listening right now, I greatly appreciate Yav and Chaim having me on here, and Shirley obviously inviting me here. I greatly appreciate it. I love your country. I was telling these guys I'd love to go over there and just explore and see. I'm obviously a huge Christian, and I would love to just go over there and see all the history over there. That would just be amazing. So I appreciate you guys having me on here, and I'm excited to share what we're going to talk about. So I think to open up, I'm going to share some charts, and it will give you like an idea, and I'll explain where I started within the charts, and then it will share the story of what's happening. And then I'll bring us to where we are now. And then we'll talk about, my goal obviously is we want to talk about the market, where I believe we're going to be going, the pivots we made within in our company to be able to understand what's happening. We made pivots about almost 6 to 8 months ago, working with our team to train them. So we're going to talk about specific tactics that you can work with, to get properties sold at a higher price when cash buyers are pulling out, to sell properties when hedge funds are pulling out, and be able to get that done. And also, because obviously the way we make money in this business is by creating a spread from the acquisition to the disposition. Well, dispositions have changed because of the market condition, so we still want to exit high, but it also comes down to understanding what to offer a seller, and understanding if you can offer the seller and get the property at a good price and educate them on what's happening with the market, then you have that, the ability to create that spread. So then also we'll talk about, I know we wanted to talk about budget. What would I do with a minimal budget? What is the most productive thing that you can do on the least amount of budget to go out there and crush it? So we're going to cover a lot of stuff, here. If anybody has any questions, we can go through that too. So I'm going to go right into it, and I'm going to put my glasses on because I can't see slides. As soon as I turned 40, it was crazy. All right, so can you see my screen?
Not yet.
Okay.
Yeah. Can you see?
Yeah, now.
You can see it? Okay, so I'm going to go back here. So, all right. So I'm going to tell a quick story about the market and where we are in the market right now and what the situation is. All right. So if you see this right here, we got monthly supply. This is the month supply of inventory back down from recorded in 1963 all the way up to current right here up to June of 2022. So if you see inventory is like a stock chart. It goes up and it goes down, and it impacts housing prices. It impacts what we do in the marketplace. Inventory is the driving force on our overall market condition. Now, this is nationally, of course. If you look localized markets are different. Like Vegas right now is getting hammered, right? Their market right now is dropping like a knife almost, and the parts of Phoenix is getting hit pretty hard. Some areas like, Kansas City is actually still, pretty stable and pretty good. So this is more of a nationwide outlook. So for a quick story, these gray sections right here are recessions. And just to give you a quick story, back in the 1990s was the savings and loan crisis in the United States, and it's called the S&L crisis in the United States. Now, during this time right here, home values in Arizona, home values across the country plummeted to a certain point. And there was a gentleman by the name of Robert Sarver, and Robert Sarver took advantage of the decline in home prices and the spike in inventory, and was able to buy about over 1,000 acres in Tucson, Arizona. And then he turned those 1,000 acres into lots where home builders could build houses. He turned them into commercial real estate. And as the inventory declined and home prices increased down at this time right about here, he sold off those lots, and he sold them off, and he made hundreds of millions of dollars doing it. And eventually he bought banks, and then now he owns the Phoenix Suns, which is, obviously the basketball team here in Phoenix. So because of this time right here, enabled him to go out and be incredibly successful and made hundreds of millions of dollars. Same with back here. There's always boom and bust cycles, and we'll talk about why there's boom and bust cycles. But during these cycles right here, there is, if you're positioned correctly, you understand what's going on, you can make a lot of money. So for me, I got started in 2003, right? 2003. I got started in early March, April 2003. At the time, there was about 3 to 4 months of inventory. I got my first check in May of 2003. My first check was $11,008. That was my first check. So I got started in May. So the inventory was low. And if you see this point in time right here, it's called what's called a sideways channel. And this sideways channel is the inventory is going in a range between, like 4 months supply down to 3 months supply. So it's going about within 1 month supply. And as a real estate wholesaler, real estate investor, the strategies like fix and flip work really well, like buy and hold work really well, like wholesaling works really well. Buying, land and entitling that land and selling that land during this process right here. Buying apartment buildings, is a really, really good method and model right here. So what happens is I turn around in May of 2003, I went out and started wholesaling. I got my first check, and I made about $156,000 my first from May to December of 2003 in my first year, right? And I primarily, as a lead source, I targeted pre-foreclosures as the only lead source that we talked to. And I actually knocked on pre-foreclosure doors. So I'd have to go to the house, knock on the door. It wasn't virtual. I wish I knew about virtual, because I would have saved myself getting, chased after by dogs and yelled at and, had guns pulled on me and stuff like that. So I wish I would have known about virtual wholesaling, but I didn't at the time. So I just went, I got a list of pre-foreclosures. I went, knocked on their door, and I wanted to see if I could help them before it went through sale. So in early 2004, right, what happened was, as I started getting some cash, I learned a method, which we can talk about. It's a method where you can have a pre-foreclosure. You can reinstate the existing loan on the property. You can reinstate it, which is anywhere from $5,000 to $6,000. You pay the seller to move out, a couple $1,000, $3,000, $4,000, $5,000 to move out. So all in, I had money where I paid the seller to move, and then I had to reinstate the loan, and I took that property over subject to the loan, and now I own the property for about a $12,000 to $15,000 investment. I go in and I clean up the property and I turn it into a rental, but with a lease option to purchase, right? So I had a lease with an option to purchase with a buyer. They would put down like $15,000 or $20,000, so I'd be flush, no money out of pocket. Now I'd have this lease option, and I'd arbitrage the monthly payments, so I'd make cash flow every single month. And now I held these properties. Well, in late 2003, early 2004, I built a property portfolio through 2004, early 2005, of about 120 properties, $36 million worth, doing this strategy. And I did it with roughly about $100,000. So I saved $100,000, and I basically recycled this $100,000 by doing this in particular method. Now in mid 2005, the market was on fire, inventory was low. We had a group out of California that bought all of the properties, 120 properties over a course of about a 6-month period, and they were buying it at like 110% of value. So we bought the properties with equity. We bought the properties good. And then they bought our package deals for, and I made millions and millions and millions of dollars during this time frame right here, because the model was, it's literally an incredible model. They came in, and we were getting wires coming in on a weekly basis for $400,000 and $500,000 and $600,000 a week, selling these properties to investors out of California that were buying these properties. Well, so I was sitting on millions and millions of dollars. I bought a beach house in Southern California for about $1.1 million. And in 2005, I didn't understand about market condition. I didn't understand about market cycles. No one shared this information with me before. So I was kind of blind when it came to what the market, I just thought the market was good. And hey, we just, you get properties under contract, you sell them, and you kind of do some deals and stuff. So I didn't know and understand market cycles. And I wish that someone would have shared this information with me way back when, because I would have made kind of different decisions going into this inclining inventory environment that we had right there. So think about this. I'm sitting on millions of dollars, right?
And you probably thought the California buyers are stupid, right?
That's I was like, these guys are crazy. They're buying, the market's, really, really frothy at the time. But, honestly, in like 2005, I started in 2003 to 2005. So I never experienced a shifting market. So I just thought that's the way the market was. It seemed really frothy, but people are still in the buy. And I didn't really know what was going on. So I have 2 daughters. And at the time they were both in dance class, where they, they have like dance, and then they do like, competition dance, and they do all this stuff. So I was going to their dance practices daily, and there was a dance dad that was there. And that dance dad was a civil engineer when it comes to entitling land projects, right? And he's like, hey, you know, and we're talking about, hey, I sold these properties and this, that, and the other, and I'm looking for other different investments and stuff. And he goes, we should do land acquisition and entitlement. We should take them by raw dirt, entitle that property, put zoning on it, put a platted engineer lots, and then sell them to home builders, because home builders are buying like crazy. So me, without doing research, without understanding the market, without, you know, seeking advice, you know, like about understanding the market, I had millions of dollars I was sitting on. I bought the beach house in Southern California. I was like, okay, let's do land. So in late 2005, early 2006 there, I started aggressively buying land. I bought 138 acres in Tucson. I bought, you know, 8 acres for a multifamily property here in Phoenix. I bought another 20 acres up by the NFL stadium up here where the Super Bowl is going to be played this year. I bought another 10 acres with like a 39 lot subdivision, and bought another 28 acres down in, you know, central Phoenix area, down in the area. And so I went on a massive spending. I had 580 lots that we were entitling. I was meeting with attorneys. I was meeting with civil engineers. I was meeting with city council members to get a zoning approved on properties. So I went from wholesaling to now I was a developer. I was, developing and working through this entitlement on these properties and stuff like that. So I kind of got away from what I was doing, but what was happening is inventory was declining, right? Inventory was increasing, which now the market was slowing. Buyers were kind of pulling out of the market. People were backing off. The stock market was starting to come off, and I was buying land aggressively, which is the absolute wrong thing you should do during an inventory inclining environment, right? It's the worst thing you can do. Buying houses is not a good thing during this rising environment. So what happened to me was I found myself in now 2008. I had $30 million worth of land. The land prices went down to zero, right? Because the houses were collapsing in pricing. I had debt. We had a debt servicing of about $100,000 a month. I was writing checks for. I had this huge, reserve of money that was just dwindling and dwindling and dwindling day by day by day by day. And as we're trying to keep things afloat, I was reading the newspaper looking for signs of hope. Then the recession hit in 2008. There was foreclosures everywhere. It was a bloodbath. It was a mess, and finally it came to the point I had to give the properties back to the lenders that we had. They were non-recourse lenders, so it's not like I had personal guarantees. So I had to, they couldn't come after me personally. So we gave all the properties back. I lost millions of dollars because I did the wrong strategy at the wrong time because I didn't know this. And I found myself in 2008, 2009, starting over from scratch again, broke. Right? Living month to month, broke, starting. And we talk about budget and what you do on a minimal budget. I didn't have a budget. I didn't have a $2,000 budget. I have a $3,000 budget. I had no budget. And I literally hand wrote letters on my kitchen table. And in 2009, hand wrote letters, and I wrote 25 a day. I'd write them 6 days a week, and I'd send out, 25 letters a day, and I'd send out 125 to 150 letters a week, and I would slowly get calls. I'd talk to a seller. I get a property under contract, and I'd flip it and make 5,000, 10,000, maybe, whatever it was. And I had to restart my entire business in 2000, late 2008, early 2009. Because I lost everything. I lost the millions of dollars. I lost the land acquisition projects. I lost all that money that was made because no one showed me this that we're talking about today. So here's the thing. When the inventory is inclining right here, we do not want to buy houses. We do, unless there's significant equity or you're buying them cash, right? 50% equity or cash, and they cash flow significantly. We do not want to buy land acquisition projects. We do not want to buy Class C or Class D, multifamily projects, right? You want to, if you're going to buy them Class A and buy them with equity. So we don't want to do those type. We don't want to do the Burr method during this strategy right here. This absolutely not. The best strategy is what we are doing right now, which is wholesaling and stashing cash. Now, there's a peak, right? There's a peak in the market, which that is the bottom of, and we talked about right there. There's 12 months. There's roughly, it's hard, all right, 12.2 months supply of inventory in the marketplace. That was the absolute bottom of the real estate market, was January of 2009. Now, look what happened from that point. Now, you could buy houses in Phoenix, Arizona for $20,000 to $30,000 a piece. You could get land, and you could get terms on land like nothing. You could get a 5-year term on land that to take over that land. You wouldn't even have to pay taxes on it. You could probably put minimal down. The seller would do a seller carry on any type of terms, and you could get it for pennies on the dollar. So buying houses, buying land, you could get multifamily projects in 2009 for pennies on the dollar. You could get, you can get land for pennies, houses for pennies on the dollar, multifamily pennies on the dollar, storage units pennies on the dollar, because of we're at the bottom of the market and the peak of inventory, right? So now, what was the pivot point? The pivot point right here that made the inventory decrease and decline. There's a specific indicator, a pivot point that will happen. It's going to come here in the future. That will happen. And that pivot point is when the Federal Reserve of the United States comes out and says they're doing quantitative easing. Now, if you know, in America, in late December, November of last year, they hinted that they're going to do what's called quantitative tightening. So to give you a picture of what that looks like, this is the Federal Reserve. This is their balance sheet right here. So I want to show you what this looks like. Their balance sheet in 2015 was about $4 trillion. Now it declined under $4 trillion down to about $3 trillion. And then what happened in 2020, right? Their optimal balance sheet is about $3 trillion, about $4 trillion right here. This is the green. So in 2020, we all know what happened is that coronavirus happened, and the Federal Reserve came out and they injected $4+ trillion into the marketplace. Now, it's supply and demand. If you pump money into the market, what happens? Well, the dollar devalues, right? And then you get what's called inflation, right? The CPI data came out yesterday. CPI data came out the month before that. It was 9.1%. Yesterday it was about 8.5, 8.6%. So inflation is at 40-year highs right now. And the Federal Reserve, what they did was said in early 2022, they said, we're going to do quantitative easing. We're going to raise interest rates, and we're going to pull money out of the market. So what they did is they want to get their balance sheet. They want to pull $4 trillion out of the market. And when you pull money out of the market through quantitative tightening, a couple things happen. One, real estate market, the prices collapse. Stock market goes down. The commodity prices, when they pull that money out of the market, collapse. When the Federal Reserve pumps money in the market like this, $4 trillion, what happens? Housing prices go up, stock market goes up, commodity prices go up, and all assets, go up. Why? Because when you pump $4 trillion in the market, people have money, investment banks have money, lenders lend money, and they're pumping liquidity into the market, and all asset classes rise. So the question is, what happened at this point right here? What happened was the Federal Reserve came out and said they're quantitative easing. They're going to pump money into the market, and they're going to lower interest rates. And because of that move by the Federal Reserve, the market declined. So if you would have bought houses here, let's say you would have bought, I don't know, $50,000, $20,000 houses. How much is that? Right, $50,000, $20,000 houses. So that's what, $1 million bucks. So we did about $1 million in houses. The houses here, right, are worth about $400,000. Let's call it 400. So you would have went from 20,000 to 400,000. So you would have had $1 million investment on houses that you could use leverage if you wanted, but you could turn around and turn it into $40 million, right? From this time period right here, just because you timed the market correctly, understanding what the Federal Reserve does in the market. Now I'm going to fast forward real quick, and I'm going to go over here. And I'm going to focus in on where we are today. So this is 2008. This is the recession of 2008, the market crash. A lot of people got involved in real estate during this time right here, 2012, right over here to 2019. If you see, it's a sideways channel, right? It's that sideways channel we talked about over here. So it's that sideways channel. It's very easy to do real estate. You can fix and flip properties. You can buy and hold properties, buy and hold and then sell the properties. You can get, rents are higher, so you can make great cash flow on property. And this is a great real estate market to do stuff, right? Most people that I have met, and I spoke to a lot of groups, have got involved during this time, but they don't know how to navigate this, and they don't know how to navigate this right here. So the market in the September of 2020 hit its low of 3.3 months supply. And then as the Federal Reserve started increasing interest rates, you can see we're basically right now at 9.3 months supply. It's a vertical move in supply, which we know impacts pricing. And then I go over here, we're basically at August of 2007 when it comes to supply. We're not to there yet, but this move right here is a lot more aggressive and faster than this move right here. So now we look at home prices, right? What happened to prices, right? Home prices, this is back to 1975 all the way up to where we are today. So home prices during this crash, this inventory crash right here, inventory increase, what did it do to home prices? From its peak in March of 2007 to the low of January of 2009, that was an 84,000 drop in home prices over an 18-month period. 84,000 in 18 months, right? We go over here, houses prices went parabolic, right? It went up and it went to the high of 569, and then the last 2 months has dropped $113,000 in value in 2 months. So you see parts like Vegas and other parts of the market, house prices are declining, right? They're declining right here. So this could go, it could go down to where it could lose, but the way this took 18 months, this took 2 months. This is the largest, fastest home drop in U.S. history, right? That you're looking at right here because of this spike that you're seeing right here in inventory. So now the question becomes, where are we going? Right. And then what is going to happen?
What do we do?
Yeah.
What do we do about it?
Yeah. So where are we going? Well, guess what? We're gonna hit a peak, right? We're gonna go into a recession. I don't think we're technically they say we're in a technical recession right now, but at the end of the year, they're going to go back and they're going to do a revision of each quarter and they'll look at overall from an annual basis. Are we in a recession? The 2-year and the 10-year are inverted. Oil prices did go over $100 a barrel. So I don't think we're in a recession yet, right? I think we're going to go into a recession in mid to late next year. And it's going to be a full-blown recession. The Federal Reserve will eventually, and we're going to go in this gray period right here. And when we go into a recession, the Federal Reserve, inventory prices will increase. They're still going to raise their interest rates as they do throughout the rest of this year. So we're going to see inventory prices increase. It could hit all-time highs of inventory. We're going to see home prices come down dramatically as they come down and they correct, right, down through here. And it's going to come down fast. And then when we do hit this recessionary period right here, the Federal Reserve will come out and they're going to say, we're going to do quantitative easing because we're in a recession. That means they're going to pump money into the market. That means they're going to lower interest rates. And what that's going to do is now it's going to take us from a peak, and then now it's going to be able to drop. Now, this strategy, when that happens, that's when you buy real estate. That's when you buy the stock market. That's when you buy apartments. That's when you do land acquisition product, stuff like that. So right now we want to wholesale our brains out. We're going to talk about the virtual wholesaling and how to pivot in this market. But when this pivot happens, This right here, this time frame when the market does correct and come down, which it will, there'll be one of the greatest wealth creation opportunities of our lifetime, in my opinion. Imagine if you got 50 houses, that you could do 50 houses right here, and you took $1 million into $40 million, but you did it in a way where you could literally recycle the money, right? Where you could not use a lot of capital out of pocket to make it happen. Your goal is to get, a small bankroll, and then you can start working on, buying houses, and buying houses using seller financing, buying houses with equity, lease optioning those properties and getting larger, lease option down payments that cover the cost of that you have out of pocket money, and be able to do that. Imagine having 100 houses that you bought low, right, and you turn around and sold high as the market declines in inventory. What would that do? That would literally, it would change your whole entire financial future, where you could turn literally $1 million, $100,000, $200,000 into 30, 40, $50 million. So that's the type of play I'm talking about, that we have this opportunity, and it's coming fast right now. But I think we got till now, until mid to late next year, where the Federal Reserve will make this pivot, and then we can aggressively go after acquisition model versus the flipping model. So any questions about that before I move on to the pivoting in this market, what we have done to continue to wholesale, continue to close deals, continue to sell properties? There's two things we pivoted, is on how we exit properties, and then how we offer properties. So any questions on this before we get into that?
I think it was a great overview about, the market cycles, if you will. And I think the key is to identify where we're at now, because we feel that there is a change, and what we should do as wholesalers to take advantage of the situation, so we don't end up on the wrong side of the equation.
Yep. So we want to wholesale like crazy, stash cash, and then when this pivot happens here in the future, we want to be able to capitalize on it. Okay. So now let's talk about, and I'll let me see if I can. I'll stop sharing real quick here. We'll
and we also, Sean, I know that, again, it was a great overview, but we also want, again, if you can, we can time it so we can answer questions for the guys, because we have a bunch of questions coming up, but we want, again, I think the key piece to today's call is to kind of what you see happen, and what you think is the best approach now.
Yep.
To take advantage of the
we're going to talk about the pivot that we made based upon what we just talked about, right? Let's talk about that pivot. So the pivot comes in dispositions, selling your properties, and acquisitions, acquiring properties. That's where the two pivots must take place. So in a normalized market where we have a sideways channel that we talked about, it's easy. You can put it on investor lift. You can turn around and sell it. You got cash buyers you can sell it to, and stuff like that. So what we have done on a pivot that we started about 8 months ago is teaching my team to be able to list properties on the MLS, right? All properties that we have. So we hired someone that's all they do is, when we get a deal that comes in, we list the properties on the MLS, right? That's the first thing that we do.
Without owning the property. Without owning the property. Without owning the property.
Right. Without owning the property. So we'll list the property. Let's see if I can find this site for you. Okay. So we'll list, so the first overall, we list the property. So before you can list the property, you have to position the seller so they understand what's happening before you list the property, right? You got to have a buy-in. There's certain document you have to get signed to make it happen. So essentially what happens on the acquisition side, when we're talking to a seller, what we do is part of our contract when we're talking about, and I'm going to talk about offer price too. We'll talk about that. But we make an offer to a seller, and we're going through the contractual agreement with them, and we're going through the contract with them like we do on DocuSign. We don't like to send DocuSign unless they ask us to, but then we'll clarify a couple specific points. Number one, all of our offers are conditional offers. We have 3 conditions to the offer. So we'll say, listen, I have a conditionally approved offer for you that I want to share with you. And I want to see if you can agree to these conditions, then we'll be able to, move on to the offer. So condition number one is they have to get us pictures. We need to have at least 15 to 20 pictures ASAP of the property, and if we can get those pictures ASAP, that would be great. That could potentially help us in our help us with our offer price as well. The second thing is we need a timely. You have to work with us in a timely fashion, to get documents and stuff like that. Third condition, and what we're doing is we're getting yeses out of a seller. Can you agree to doing that? And they go, yes, yeah, absolutely, I can do that. Can you agree to work with our staff on getting documents and stuff over this need? Oh, yes, I can do that. Okay, great. The third condition is we need to get eyeballs on the property. We're a virtual company. We're based out of Phoenix, Arizona. We need to get eyeballs on the property. So what I like to do is schedule a couple walkthroughs, several walkthroughs. It could be a contractor, could be a realtor, could be an investor that we're working with. Whatever the case may be, we need to be able to have you commit to where you can work with us on a time to get people in. If you can commit to those three things, I can move on to the offer. So those are the three conditions. And now we get them to agree to those conditions. We move on to the offer. When we talk about and negotiate that offer, part of the acceptance is we have a clause in our contract that states that we're an investment firm. We're here to make a profit. And then we don't know how we're going to make a profit yet at signing this contract. It could be a fix and flip. It could be a buy and hold. It could be we could quick sell it to another investor, or we could list it on the MLS and sell it to a retail buyer. At this point, Mr. Seller, we don't know exactly how we're going to do business just right yet, on how we're going to be able to make a profit. But our intent for us, just so you know, 100% transparency, Mr. Seller, our intent, we're not going to live in your property, even though it sounds like a great property. We're here to, as an investment firm, to make a profit. And we don't know how we're going to make a profit right now. We could do either one of those that we might be. Now, we have, if you position with a seller like that we're here to make a profit, and we list the different avenues that we could make a profit, then it gives us the ability to sell it to another wholesaler. It gives us the ability, if I want to buy and fix and flip, which I'm not doing right now, I could, but I've done before. It gives us the ability to list on the MLS and sell it retail. So part of our documents that we have signed is something called an attorney in fact. An attorney in fact, it's a one-page document, and it gives the seller, gives us from the seller the right to list the property on that MLS. So I'm going to see, I don't know if I have that attorney in fact, but let me see if I have that.
So meanwhile, looking for a Sean. So this is a default strategy you're using now, or only in certain cases?
No, this is the 100% strategy we're using right now. This
do you do it nationwide? Nationwide,
and I'll show you here in a second. Let me share screen, share. Okay, so this right here is the attorney in fact right here, right? So right here, so it basically, this document right here gives us the ability specifically to list the property. Authorization to sign and list docs and offers. So this gives us the ability to essentially list that property on the MLS. Let me see. It's attorney in fact. Yes, that's correct. So this gives us, so we get this signed when we get the contract signed. And now this gives us the ability to list it. And then what we do is we use this company right here, Brokerless, which is a nationwide flat fee listing service. And we typically do this one right here. I can list it. We'll list properties for either 2 to 3%. It's flat fee from the listing side. And we typically pay the $149. It's a 6-month listing, realtor, popular. It puts it out all over. You can put 25 photos on there, and the calls come directly to you. So we'll list the property on the MLS. You can call this number, and you can talk to Jack. Jack is the owner of Brokerless, and he has basically the ability, to list nationwide. There's some small markets they don't, but they pretty much cover the entire U.S. So think about this real quick. We got positioning with the seller. we're talking to a seller. We're saying, listen, we're here to make a profit. We're an investment firm here to make a profit. We don't know how we're going to make a profit right now at signing this document. We don't know if it's going to be a fix and flip. We don't know if it's going to be a buy and hold. We don't know if we're just going to quick turn it to another investor for cash, or we don't know if we're going to sell it to a retail buyer via the MLS. We don't know which one we're going to do right now, but you're going to get your $170,000 in 30 business days per the contract, right? So, and it really doesn't matter, Mr. Seller, how we make a profit if you get your price. Is that correct, Mr. Seller? Yes. Okay. So now, we get them to buy in and agree based upon that. And we actually have them sign, we have them initial in our contract, that section of that deal. So,
Sean, the reason that you do that and not going the traditional wholesaling, display to your buyers list, this is just to get more eyeballs and potentially get a higher offer?
Maximize the price.
Yeah, two things right here is because cash buyers during this time and during this time right here are offering super low on properties. They are, or they're becoming non-existent and very difficult to find, right? So cash buyers are being more difficult because now it's not a seller's market. Like right here, when you have low inventory right here, it's a seller's market, right? Sellers can determine the terms, condition, price, and everything because there's no inventory. And there's now you got more inventory. Buyers have options of what they can buy. And now they're uneasy about what's happening in the future. Is there a recession happening? What's happening here? So cash buyers that are coming in the market are being more aggressive on their pricing, meaning they're offering lower pricing on their properties. They're having a little bit harder terms when it comes to post-possession agreements and stuff like that. So that's where we're finding. So, but guess who buys all during this time right here? Retail buyers. Yeah. Retail buyers continue to buy during this time. And guess what we're finding? We're finding that we're listing on broker lists and we're getting cash retail buyers, or we're getting cash investor buyers, but they're paying a higher price than if we put it on investor lift and we get calls from cash buyers on properties that are super low. So we listed a property in Greenville, North Carolina. Was it Greenville? No, Morrisville, North Carolina. Morrisville, North Carolina. And that property we listed, and we listed it, and we literally put it out on the market. It was worth all fixed up about $300,000. We got the property for $80,000. It was pretty beat up. It was an out-of-state seller, and there was a tenant in the property that was being non-responsive. So we got the tenant to be responsive. We paid him a cash for keys to get out of the property. We got the property vacant, and then we listed it on the MLS. Now it's worth $300,000 all fixed up and needed about $100,000 worth of work because it was trashed. But we listed it for $150,000 and it bid up on the MLS to $180,000, and it was a $100,000 deal. You know what I mean? Because of the MLS. Now, here's the interesting fact. My team put it out on Investor Lift, crickets. Put it out, talk to other realtors and other cash buyers around that area, crickets. We stuck it out on the MLS. We had a bidding war. It bid up. We sold it, made $100,000 profit. So,
amazing.
You know what I mean? So it's amazing how the MLS, I'm like, and no one saw the problem. So my team was working on, talking to sellers and this, talking to buyers, talking to cash buyers, putting on Investor Lift and stuff, with zero, traction on that property. So, it's interesting. So that's how essentially we're positioning that seller to be able to work with us on the MLS. And let me see, work with us on the MLS. Oops.
So have you tried to go with a regular realtor and not on brokerless?
Well, if we go to a regular realtor, we're going to have to pay them, right? Pay them the 3%. Right. And then we do that. We're going to have to pay them the 3%. And then we got to pay the other side, the buying agent, 2 or 3%. So now you're in it for 5%. You got to pay. In this particular case, we're listing them for like 2%. and we're being able to sell the property. And our goal is to list the property lower than everybody else. You know what I mean? If we can list it lower than everybody else on the marketplace in the area, we're able to get a better, get it sold and get it sold quick.
Okay. So question here. So when you accept offers from the MLS, you take only cash offers, or how do you work with retailers that have a lender? How does it work?
So here's what we do with the lender properties. Most of them, I can tell you, are coming in cash. I can tell you that. So they're coming in cash. So let me show you this property right here real quick if I can find it.
And another question on the more or less the same topic. What do you do if there is a property with a tenant that's out the door? You don't use this strategy if that's the case?
Yeah, you can use this with tenants. We're doing it with tenants. We're doing it with owner occupied.
As is, selling it as is. As
is. Like here's the property right here that we listed. Right. This is the one this is a $100,000 deal in Morrisville. Right. You can see. I'll go down the listing history right here. So we listed it July 10th. Listed active for $150,000. And look how quick it went pending.
4 days.
4 days, and closed it a couple days later for $180,000. Right. So it bid up on the MLS, and here's the property we listed.
This is with somebody living in the property.
This is we had a seller living in the property. That actually it wasn't living. This was a tenant in the property. That was living in the property. And she was living in there with two sons that were on house lockdown because they were thrown in jail for theft. Right.
Who is the buyer? What's the profile of the buyer? This is a buy and hold guy. What is he going to do with the property?
This guy was going to fix and flip it in this little market. So let's look at like right here. If we go to Morrisville, North Carolina, let's look at this town here in Morrisville. If we go to maps, so here's Morrisville, this little town right here. Look where it's located. It's located right here, about an hour outside of Charlotte, North Carolina. This little town right here, of a population Morrisville population of 38,000 people. So we made $100,000 deal. We listed it on an MLS on a population of 38,000, about an hour and a half outside of Charlotte, North Carolina. Right.
That's
on a deal we struck on the
amazing.
Right. So this is what we have. I can show you another deal we did in Pomona, California. Same type of thing. It was let me stop sharing my screen. It was $100,000 deal.
So another question about the same topic. What if the seller doesn't agree to sign this listing agreement that allowing you to put the property on the MLS? That's a deal breaker for you?
Yeah, well, basically what we do is that we tell the seller we're an investment firm. We're based out of Arizona. We don't know how we're going to make a profit. We tell them the MLS, and we had sellers say this. They're like, we don't want the property listed on the MLS. If you're going to do that, we don't want it. And they said, okay, well, if you want to move forward with this, then, and if you're going to take away from our company a vehicle to profit off this property, and you're going to take that away, then our offer is not 170. Our offer is now 150. So if you want us to buy the property, our offer is 150. If you're going to take away that vehicle, if you're not going to take away the vehicle, we can get you the $170,000 purchase price. What do you want to do? So we basically position it. It's like you're going to take away. So let me show you how we're making an offer on the property real quick. And what
John,
we did.
Continuing also to the question asked. I mean, again, part of putting it in MLS.
Yep. Yeah. Okay.
Yeah.
Go ahead.
Giving also the exposure for the seller to see the price you're dispositioning the property. Does give you sometimes issues when you're signing somebody and it's wide open to everybody, seeing that you're making a 50, 60, 70, 100,000 profit. The seller, do you have any objections from the sellers that it's more visible to them?
No, because what we typically do is that, like, we were under contract for this one right here. We're under contract for $80,000. We put it out right? We didn't put it out for 180, we put it out for 150. So what we're going to do is we're going to try to price the property low, right? So between 80 and 150 in the condition and dealing with the tenant and stuff like that, that was literally a non-issue from a seller, right? Non-issue. But because we priced it low, right, it bid up, and we had multiple different offers if you bid it up. So we try to be the lowest available property in a specific area, in this area right here. So we wanted to be the lowest property. If we look at, properties in the area, we wanted to be, active properties, and there's not a lot. We wanted to be the cheapest available property in this area, which we were significantly at 150. That's why the property went, it went fairly quickly. So if I go to sold properties, if all the sold properties right here, there is, you got our property that sold for 180. You got 300, 255, 299, 439. So these are all in the 400s, 375, 465. We got our property right here in the middle at 180. So if you
180,
yeah, and the secret comes down to the offer calculator. Now there's two questions, right? A lot of the buyers that are coming in via MLS, either cash retail or cash investor that just sees the property, and they're not seeing it through Investor Lift, they're seeing it via the MLS, right? So we have either cash investor that's coming in, that's either a buy and hold investor, fix and flip, or cash retail buyer, that you have a retail buyer that's sitting on the sideline that's been waiting for a deal that comes out that will come and pay cash. Those are two of the deals that are coming in. We also have a retail buyer that has either an FHA loan, conventional loan, VA loan, or USDA loan, right? Those are 4 loans that we have the ability to accept the offer on, and we're going to structure the deal a little slightly different. This is now a retail buyer, right? I really don't like doing VA or FHA loans because they require the property to be fixed prior to close, but I do like conventional loans. So on a conventional loan, we'll look at those offers that come in. If we get a conventional loan, they'll turn around, they'll send the purchase agreement. We'll opt the seller in for the conventional retail program. We'll actually pay them more money. Instead of 170, we'll give them 173 to opt in to this retail buyer program. We tell them it's going to take a little bit longer, but they're going to get their $3,000, and we have a retail buyer that's going to buy the property, and we're going to handle all the commissions and fees and closing costs. And you're going to get, now, instead of 170, you're going to get 173,000. So now what we do is we're connecting the buyer and the seller. They're going to be in contract together via our contract. And then we take it to a title company. They close the transaction. We use Blueprint Title. They're trained on how to do these type of transactions. They're out of Texas, but they do deals nationally. And what they do is now they go through a normal procedure of closing. How do we get paid? We get paid on what's called a notice of interest. It's a lien that's filed on the property, a notice of interest, and the title company will request a payoff on the notice of interest. And it's all those fees less our acquisition price is our spread. So it's a little different model, but allows us to be able to sell properties to a retail buyer that is using a conventional loan. So literally it opens up the entire marketplace to do transactions. So
what's the name of this title company?
Blueprint Title. They're out of Texas, and they do deals nationally, and they're specifically trained on doing what's called retail buyer program deals.
Amazing. That's a great tip. Because this is then you don't have the seasoning bullshit that FHA have, and because they used to make you wait 3 months before you can sell it, right? Again.
But here's the situation. You're not on the contract. It's a contract between the buyer and the seller, and the seller, right, is seasoned because they own the property for 15, 20 years.
Yeah.
So now the contract's between the buyer and seller. That transaction happens. We opted the seller in, so there's 100% clarity and transparency, and then we file a notice of interest, and that notice of interest is
protected.
Awesome.
100%.
Yep. So and the lenders don't
Right.
they don't question those or anything like that. So now we have the offer, right? What do we offer in this current market? What is working? How do we get the lower offers? And what we're doing is my team has a calculator. We take the average Redfin, the Redfin price. We take the REI Automator price, right, which is REI Automator or PropStream, you could say PropStream price or in Redfin, and then we take the Zillow Zestimate, and it adds it up and divides it by 3, and it gives us an average price. And then we calculate the repair cost, either $10, if there's minimal, if it's very clean, upwards to $25 if it needs a lot of work, right? So let's say the square footage is, 2,000 square feet, and you're going to use, say, $20 a square foot. It can give you a repair cost. And we're offering sellers, right? We start at this number. Now, first off, a rule of thumb, you always have the seller name the first number first. Always, right? You always have the seller name the first number first. That's how you get super large spreads, right? You ask the seller what do they want to get for the property. If we were gonna do the repairs, if we were gonna deal with a tenant, if we we're gonna handle all the hassles, and we're gonna make this as easy as possible, what's the minimum cash you'd take on this property? If we could get this thing closed in your timeline, we took all the hassles off. Now they're gonna give you a number of all that, and that number, if it's in the money, meaning if it's lower than $330,000, you can sign it right off the bat. But if you have to name your first number first, you got to start at these low anchor numbers and say, listen, Mr. Seller, my offer is going to be between 238 and 284, right? And now you're at 60 to 70% less repairs at this number right here. And you'll be amazed as you're talking to sellers, and a lot of them are going to say they want retail. Right. And a lot of them, we say, guess what? We're not your person in this current market right now. We're not buying retail as an investment firm. If you want to, have it handled, we're going to be between these two numbers. And there's deals that we're passing on. But the worst thing you can do in this market is offer too high. Now you're stuck with the property. You're obligated to the seller to make that thing happen. Now you're calling back and trying to renegotiate or cancel or do whatever. And you're canceling a lot of properties because the price is too high. This right here, if you offer with this repairs in this budget, you'll be in the money. You might sign less deals, but you're going to make more money on this transactions, and you'll have less heartache trying to sell the properties.
100%.
So, so any questions about our retail program, our listing on the MLS, or our offer strategy?
Sean, the retail program allows you also to enter deals which thinner spread. Let's say it doesn't fit the 80, you see 90. I mean, the seller wants 90% of the ARV and not 80%. Right. You still go the retail route. I mean, because you're putting it on MLS and you might make a couple of bucks, but less than what you as wholesaling. But you still go to that route, or what's not falling under that percentage, you walk away.
Yeah, we're right now, just because we generate about on average about 200 and 250 leads a week right now that we're going through on the leads. So we found that if a property is not a deal, it literally the whole team, it becomes difficult because we're spending a lot of time on things that aren't really working. And we have one of our sales reps. She's really good, but she wants to help everybody. So she signs contracts at too high, and we end up having to go back and cancel them or renegotiate them. And the seller's mad, or they committed to buying another house, and they're counting on our deal to close. And now they're, kind of freaking out and stuff. So it puts us like in a bad situation. If you have no inventory on the books, and you're transparent with the seller and say, listen, my price on this property is, $238,000, but we could try the retail route. We can try that route. If you want to go there, we can do that. I'll handle all the stress and the headaches, and go down that route. So now they know what's going on. You could do that. But honestly, I'd rather just get a deal.
100%.
Quick question about any other paperwork required when you list on the MLS? Do you ask you to put the realtor approved contract, the state approved contract, or things like that, or it's your standard contract that you
so
use?
if it comes in and it's a cash transaction that comes in, you can use your BC contracts that you'd normally do, and we assign pretty much 100% of our contracts. So we would get the BC contract with the seller, with the buyer, and we would get the non-refundable earnest money, and then we do the assignment after that. When listing on the MLS, sellers will sign disclosure forms, which are those disclosures. You want to have them sign it. So what we do is, so we have the person that will list on the MLS. They'll call the seller, get the disclosure form signed as part of the initial package with them, and then we have that in our file. And then we can turn around and list the property on the MLS, and then we have the disclosures in there, which is going to be needed to be given to the other realtor. It also gets you off the hook as well. Now, if it's a retail transaction where it's like a conventional buyer, then that's going to be on a normal MLS form, and that agent is going to send over that offer on that MLS form, and then your seller is actually going to sign that offer between the seller and that buyer, and that's when you file your notice of interest.
Got it. And another question: when you deal with retail buyer that has conventional loan, if the property in poor condition, do you have any issues closing because it's not going to pass the lending inspection or the appraisal?
So there's two things. There's FHA and VA require that the property be fixed up prior to closing, right?
Okay.
So there's two ways you can do that. Number one is you can have a contractor, and typically the agent who submits the offer has a relationship with a contractor or two. That's how we find them. Then that contractor goes in and fixes up the property per the inspection report that was done, and then they will get paid out of escrow at the close of title. You just got to make sure your numbers work, because that's going to come out of that spread between that contract price and your contract with them on that notice of interest price there. So you just got to make sure the numbers work. If a bid comes in for $25,000 or something, and your spread's 25,000, then it's a deal breaker. It's not going to work, of course. If it's a conventional loan, and the conventional loan does not require that the property be fixed prior to closing, then you could do a repair credit to the seller, and that can be done on the HUD.
Awesome.
Much gold, so much nuggets.
Yeah.
Sean.
So we have probably 10, 15 more minutes, Sean. So let's shift gears on the marketing side, on what works for you. Do you make any changes during when the market changes, or you keep the same marketing? And what would you do if you have a limited budget? I don't know, $1,000, $2,000, $3,000 max to get the engine going to start generating leads in today's market?
That's a great
virtually.
That's a great question. Virtually, yeah. I do everything virtually now because Haim convinced me to go virtual. Good job. Yeah. So we do everything over the phone. I think we've done maybe one or two deals in Phoenix this whole year, right? Also, everything is done over the phone. We never look at a property. All the acquisition, disposition, everything's done, exactly like we're talking about. So just what you guys are doing too as well. So first off, you have to have the understanding that when it comes to generating leads, your goal is to take your budget and do as much as you can, which we'll talk about different strategies here in a second. Do as much as you can to get that first deal. Let's call the deal $10,000, right? And then you want to take that $10,000 and take 25% of the profit proceeds and reinvest it back into marketing. And then what happens is now you get another deal. It's a $20,000 deal. Now you have $5,000 to reinvest. And what happens is if you continue to do that, it's going to increase your budget. It's going to increase your budget where then you can focus on the three pillars, right? Every multimillionaire wholesaler that's doing millions and millions of dollars, their core marketing strategies are based around three pillars: pay-per-click advertising, direct mail, and TV advertising. Those are the three. If those three are scalable nationwide, you can generate tens of thousands of hundreds of thousands of leads, and you can do, millions and millions of dollars off those 3 pillars. So whatever strategy, whether it be texting or cold calling or other strategies, that you're doing, your goal is to, or even offering on for sale by owners and stuff like that. Your goal is to create a marketing budget to focus on those 3 pillars, because those 3 pillars are the holy grail that will enable you to generate leads 24/7 on autopilot, and scale the business. So let's talk about minimum. So if you understand that the whatever marketing method we're talking about right now, you want to get into those 3 as fast as humanly possible. So now, 2 things: a couple $1,000 budget a month. There's one is what I love and do is nationwide pay-per-click advertising. So let me share my screen, and then I'll go into why I think. Okay, so this is my campaign. So if I go like all time, then I'll go back to shorter time frame. So this is campaign. So on this particular campaign, I've spent about $700,000. Well, so totally I've spent about 3.7 million in this, and I have multiple different accounts that I do test different things on. But I spent about 3.7 million on this campaign, 705,000 just on these campaigns, and it generated 9,870 leads, right? Currently, right? And they're converting at $64, $57, and $184. This is a California campaign. This is an exact match nationwide campaign. And this is a nationwide campaign right here that we have. Different budgets on each one as we do stuff. But I think we're averaging right about $2,000 a day on this, or about $60,000 a month on these particular campaigns. So let me move this over real quick. So if I go over here, and let's say if I go the last 30 days. So last 30 days, this generated about almost 800 leads. And this is just, obviously, this is not including direct mail. This is not including, Bing or anything like that. So this is about 800 leads. So what if, and you got 63, 64, and about 46. What if you knew, let's call it about $63 cost per lead, and you have 2,000. Let me get my phone real quick. Let me do some math. So you want to generate some leads, and you go, okay, so I've got, say $2,000 divided by 63. That's about 31 leads. That's about 31 leads on that budget you could essentially generate if you had a pay-per-click advertising campaign. So what I would do is I take maybe 1,500 and you divide that by 30 days, right? And that gives you a $50 a day budget in your campaign if you had $1,500, right? 1,500 divided by, say, 30 days. That's 1,500 divided by 30 days is $50. So that gives you a $50 a day budget in a nationwide campaign that you can generate leads 24/7 that come in, right? And then you can start scaling it as you get more revenue coming into your business. Now, that's number one. Number two is REI Automator, right? Or this is a white label of PropStream, so it's PropStream. So if you have a minimal budget, right, and you're going to go and you want to do deals in Morrisville, North Carolina. Let me let this thing load. PropStream is slow. As this loads. Come on.
So you don't do now cold calling and texting while we're waiting for PropStream to upload?
No.
No?
Nope.
Even if to a beginner, you wouldn't recommend it because it's more outbound marketing and cheaper cost per lead?
The reason why I don't do that is because when you reach out to a seller, right, now they're going to go to you and they're going to say, what is your asking? What is your offer price, right? Mm-hmm. They're going to ask you what to offer. with marketing like that we just talked about, and we talked about, you know, pay-per-click advertising, direct mail, and TV. Now sellers are reaching out to you. Now you can ask them what's your asking price. That's a big difference in marketing, right? If you know, you reach out to a seller, if someone calls me and says, hey, I'm looking to buy houses in your area, right? And you know, I'm going, what my first thing is going to be, great. You know, what's your number? You know, what's going to be your offer for the property?
Mm-hmm.
Well, tell me about your property and tell me what the situation. Well, it's a great property, this, that, and the other. And he goes, well, you know, what's your offer? Right. So I have the control of the conversation. You reached out to me. What's your offer? If when a seller reaches out to us via pay-per-click, via direct mail, or via TV, they're calling us. They have a house that they want to sell. So I can say, listen, what's your asking price? You called us, you want to sell, you found us online. What's your asking price? Right. So I like that model a lot better. You get larger spreads, you get better deals, you have a better, you know, conversation with the seller, and you can, you know, you can determine that distress, you know, with that seller if they're motivated. So now, but on a budget, right? If I was starting out on a budget and I'm going to do virtual, and let's say I want to do Morrisville, North Carolina, right? You can start with texting and cold calling for the sole purpose of getting a check to reinvest back into one of those three pillars, right? To reinvest into direct mail, reinvest into pay-per-click advertising. Your goal is to increase your campaign to $200, $300, $400, $500 a day in the pay-per-click advertising, so you have leads coming in, because they are by far the best leads. Like, you know, I sit down with my friends that are doing, you know, $3, $4, $5, $6 million a year in virtual, you know, in wholesaling, you know, and if you look at their top campaigns are direct mail, TV, and pay-per-click advertising. All the other ones are just minimal. They don't move the needle, right? Those three campaigns move the needle. But if you have to start somewhere and you have a measure, I would take $1,500. I do $50 a day in, say, Google AdWords campaign. I take the other $500 and I do this. I would go into Morrisville. I go to a filter. I go in and I hit pre-foreclosures, right? I'd see how many are there. If the list is too small, you got a list of 33, then you have to bring in other types. So I'd hit pre-foreclosures, you got 33. So I'd be all over these in Morrisville if this is where I wanted to be, right? And then I'd go over there and I'd hit, the other one is really hot right now, is senior owners. So if you have senior owners, there's the big list. Now we can go and we can check, do we want owner occupied? We want no, meaning we want investors. So these are senior owner investors right here, senior owner. Property characteristics, we don't want to have all properties. We want to have multifamily, 2 to 4, and single family, right? And I'm just going to check vacant just to see. So only 29 vacant. So that's a small list. So I'm going to put any. I'm going to put MLS status, no, right? I'm going to do, you can do actually ownership info, how long they've owned the property. So you can go years owned. You can say 5 and see what that does to the list. 17. So you can go 10. That same thing. So all these people are own investment style properties. They're non-owner occupant, and they've owned them for more than 10 years, right? We know that. Now we're going to do valuation, and we're going to estimated equity 50% or more. It's probably going to be the same number, 1,600. So this is a great list. And why would I say senior owners that are investors that own the property with 50% equity? Why would I say they would be a good source? Because baby boomers now are exiting the market. A lot of calls of these leads we came in, we talked about these 700 plus leads. A lot of them are coming in that are either pre-foreclosure or they're senior owners. There are owners that are baby boomers now, and there is a massive amount of baby boomers that are now in their early 70s to 90s that are divesting their properties, selling their properties, and this is a great list. Okay, a great list. Another great list is tax delinquent properties.
So this list you can send direct mail for this one?
No, I do like this one right here. Yes, you could send direct mail, but what you can do is you can go in, especially let's talk about these senior owners real quick, right? So we got these 1,600 senior owners. We can go in, we can save this list right here. And we can go in and we want to make sure that the ownership info is by an individual and not a corporate. So we have 1,200 senior owners that own 10. Now what we can do is we can take that list and here we can skip trace the list and we can call them and text that list, and you can send a cheap postcard, like a 35-cent postcard or something like that out to the list. But if I had a minimal budget, I'd take $500, I'd skip trace this list and I'd call I'd be all over these people. I'd call them like crazy. I'd call them, text them. I'd work on to get a deal. I take the other $500 and I put it into a Google AdWords campaign, so I have leads coming in. So I've got there's a guy out of Oregon up there who's doing a campaign and stuff like that. He never did Google AdWords. He kind of, he was like, I don't know if I want to do it. I've never done it before. So he got set up. He got his campaign set up and got it going. He's done more business now in the past 30 days than he's ever done ever. And he's got deals in California. He got a pre-foreclosure deal in Oregon that he's got going on. He's got another deal he's working on, another pre-foreclosure deal that came in from that. I got another guy in California, in LA area, same thing, was reluctant to do Google AdWords, got started doing it. He got 3 deals right out of the gate on about a $3,500 spend. The first deal was $40,000. Second deal is about $28,000, and the third deal was $500,000 in California. So
not bad.
Yeah.
On a $3,500 spend. So it's almost like this. It's like fishing in the ocean, and you don't know if you're going to get a whale or a minnow, right? You don't know what you're going to get, or you're going to get nothing, right? So, but you got to have the lines in the ocean to be able to have the opportunity, and Google AdWords is a line in the ocean. So with this right here, I would skip trace this list. These are great lists you can do in small markets across the country. If you go in big markets, like if you go to Charlotte, it's going to be difficult because you have more investors there, more people hitting the same people. I like smaller markets across the country that are outside larger markets, like Columbus, Georgia, great market. Macon, Georgia, like we pulled so much money out of Macon, Georgia. Macon, Georgia, little market right here. Look at that. So this is the same criteria, senior owners right here, 50% more equity, 10 on whatever here, 2,800. This would be a great list in Macon, Georgia. But I zoom outside of Macon. Where the heck is Macon? I mean, there's Atlanta. It's about 2 or 3 hours outside of Atlanta. But this little market, I think we pulled 200 or 300 grand out of Macon, Georgia, just on deals.
Nice.
Sean, what is the minimal population that you would consider even getting into small area?
It's interesting, the smaller the population, the more remote it is, then the deeper the discount that we require, right? Even lower than this. We would even get, we'd offer 50 and 40% of a number. So the deeper it is. Now, we've sold properties in 1,500 population. So what works the best is the population, and it doesn't matter the size. It could be 38,000 like Morrisville. I think Macon population. So this is 157,000. So this is a little bit bigger. So Macon, Georgia. So it would be something, and if you're at least 60 minutes outside of a major market. Now this one is a larger one, 157,000. So that allowed us to get more properties in here, but we are like 2 hours outside of Atlanta. But let's say if this is a smaller market, say under 50,000, I'd like to be at least 60 minutes or so away from a major market. If it's not, then it has to be a little bit larger population like this one, like Columbus, Georgia. We've done a bunch of deals in this one too.
Awesome. Listen, Sean, it's been an hour and 20 minutes. You're just dropping nuggets here.
Oops.
And if people want to follow you again, what will be the best place? And again, in case they don't know who Sean Terry is and where they can find you, what will be the best place to kind of learn from you and kind of follow your content?
They can go to flip2freedom.com. They can go to our website there. Or if you just go to Flip2Freedom on Instagram, at Flip2Freedom, you can find us there. I'm actually going through a let me see if I can find it.
There's a bunch of, again, a repeated question before you start about how to start with PPC. Do you recommend any course just to get a basic understanding if somebody would just want to get started learning about it?
Yes. So yeah, if you wanted to learn about PPC, I have a course called PPC Secrets, and what it does is it teaches how to set up a nationwide campaign and how to do it. And I'll give you a link too. That will be a good resource for you.
Sure.
I did an actual training on kind of the topics that we're talking about right here and how we pivoted. And also it talks about that strategy with listing properties and stuff like that. So how do I get you a link? What's the best way to do it?
You can provide it to us. We'll make sure to post it as well in the group to share it with everybody.
I'll put it in the chat. I'll put it in the chat. Awesome. All right. I'll just put it up in the chat there. It's Bear Market Millions /replay. And it's a replay of a training I did that talks specifically about what we were talking about, the market condition, what we've done the pivot when it talks about listing their properties, and then how to build a property portfolio when it comes to that timing of the strategy. So it's really good. I've had a lot of great feedback on that training. So it's been like a free training I did the other day.
Awesome. Great.
So what other questions?
When are you coming again, Sean? That's another question.
Yeah.
That's from us.
Anytime. Yeah, I love you guys. Yeah, I would love to come out. First off, love to come out there. I'm gonna get my family do a trip out there. I think it would be amazing. But yeah, I think I mean, just hit me up and hit Lisa up, and we'll get on the schedule, and we'll talk more about the market and stuff like that. But I think pivoting going future. I mean, we have an incredible opportunity. Don't be scared about it. Just do some pivots, learn models to be able to get your properties listed. I think that's a huge thing that's make your offers lower. Otherwise it'll be less frustrating for you. And because now it's a buyer's market versus a seller's market, you'll have sellers that be more receptive. We've had sellers that we've made offers to, and they go, "Oh no, I can do better." And then a week later, 2 weeks later, they're calling us back now going, "Hey, I think your offer's great. Let's move forward with it." And we're signing that contract. So we're offering 60, 70%, less the repairs of the average value. And they're coming back to us after a week or two, and they're going, "Okay, we're ready to move forward." So, learn about what's going on, educate the seller about what's going on in the market. And then, and give them the opportunity. And I think the biggest thing is what I tell my team is, it's a numbers game. The more people you talk to, the more offers you make, the more success you're going to have. I talk to some people, they go, "Oh, I've talked to 10 people and I haven't got a deal yet. What do I do?" I said, "Well, you got to talk to more people. You got to talk to at least, 15, 20, 30 people, and then you'll be able to do that." So it'd be awesome. So awesome.
So people are loving it, Sean. Just we want to let you know that you have family of virtual wholesalers in the Holy Land waiting for you whenever you decide to come. We're gonna have a beer. We're gonna host you. We're gonna take you to Jerusalem if you want. Listen, thank you very much for taking the time out of your busy schedule to spend the time with us. People loved it. We really appreciate it. We don't take it for granted, and we hope we can do it again very soon.
Absolutely. I'd love to, guys. Love you guys. Thank you guys so much. Greatly appreciate it. You've been an awesome hosts. Thank you, everybody in Israel. Love you guys out there. And God bless. Go out there and crush it. Stay safe. And think positive, man. We got a lot of great things happening in the future coming up, and it's we're at a great time right now. So, boom.
Awesome. Love it, man.
Thank you so
Thank
much.
you. Take care, Sean. Signing off.
All right. God bless. Thank you, guys.
Bye-bye.
Bye-bye.
Sean,
Yes, sir.
it's been
Thank you.
amazing. I think we're still live here. I don't know if Chaim closed it or not. I'm seeing it's still live on my end.
At least you look good.
Sean, great opportunity, buddy. Thank you so much again. And if everybody's seeing us again, we're so honored having you, waiting for you to come again. It's been a blessing.
I thank you so much. I appreciate it. I'll sign off here and then go get my haircut.
Enjoy, man. Bye-bye, Sean. Bye-bye.